So, welcome back, everybody. We are going to spend our next session looking at something that really is the core of the whole industry, the question of risk, risk modeling, risk management, how we understand risk, and with particular reference to climate-related risk. So now everyone's settled, I would love to introduce our panel. I'll sit down while I do that. So risk is core to the industry, but as weather patterns become more unpredictable and extreme events become more common, risk is a harder job to predict than ever. So we have a very well-qualified panel with us to explain how risk modelling and management works, where it doesn't, and where it might be going. So Henning Gloisting is Eurasia Group's practice head for energy, climate, and natural resources. He covers geopolitical risk in energy and raw material supplies, the green transition, and advises on industrial resilience and decarbonisation. Henning, welcome. Caitlin Healy is a senior policy advisor in the Resilience Directorate of the Cabinet Office, which is responsible for the UK government's preparedness and risk reduction, and also leads the National Security Risk Assessment, the government's tool for assessing the most serious risks to the UK, and its public version, the National Risk Register. And Robert Muir-Wood is Chief Research Officer for Risk Management Solutions, now part of Moody's, a visiting professor at UCL's Institute for Risk and Disaster Reduction, and the author of 8 books, the most recent of which, This Volcanic Isle, was listed by the Daily Telegraph as one of the 6 best science books of 2024. So, welcome, all of you. Thank you very much for joining us. I thought I'd begin with a little bit of a sort of risk 101 question. It's something that we reference and we speak about quite a lot over the course of the day. But I wonder, Robert, perhaps we could start with a brief overview from you of how traditional risk modelling works, particularly in relation to climate.
Okay, thank you very much. Thank you, everybody, for coming to this session. So just to explain who I work for, what I do. I work for a risk modeling company, so they're not very well known, I think. If you're in the insurance industry, you'll know all about them. If you're outside, you may not, but a risk modeling company, all we do is model mostly catastrophic risk all around the globe. We are a privately held company. There were 1,400 people in the risk management solutions when we got acquired by Moody's 3 or 4 years ago. So among those 1,400 people, there are more than 100 PhDs. So we specialize in everything you need to know in order to model risk. So what is risk modeling? Well, I mean, basically, history is not long enough to tell us every bad thing that can happen. So we create a synthetic history. We create a synthetic history of maybe 50,000 or 500,000 versions of next year in which we simulate a wide variety of potential events. I mean, we want to explore and we are looking at events of all kinds of climate types, or the whole variety, or the whole gamut of climate types, earthquakes, terrorism is another area we look at, and so on. We respond to what the insurance industry needs. So our clients are almost all insurers, reinsurance brokers. They need to be able to quantify risk, to measure risk, to price risk, to diversify risk, to reinsure risk. On the models we build, tell them the answers to all those questions. And that may be enough of an intro.
The crucial element within all those models is the data that's used and the build of the models themselves. Now, obviously, within the industry, lots of different insurers have models of their own, and they have data of their own. I was speaking just before this with Jonathan Clark of the National Emergencies Trust. I don't know if he's around, and he compared that model to what we see from airlines. So after a crash, airlines share information about what happened, what went wrong on the plane. But the insurance industry doesn't tend to do that quite as much after a climate event. And Caitlin, I wonder what your thoughts are on how there could be or should be better collaboration between insurers, but also with government.
Thank you, and good afternoon, everyone. Very happy to be here. So I work in the Resilience Directorate in the Cabinet Office. We run sort of central risk assessment processes all across government. So we work with every other big sort of government department. So kind of, for example, DEFRA would own the kind of climate type risks, and then that's Department for Food, Environment and Agriculture. In terms of the sort of importance of understanding risk, collaboration sits at the heart of it. And particularly at the moment, we're very much looking to move more towards like a whole society approach to both preparedness and risk. In order to do this, we need to collaborate with everyone. So it's not just government sharing data with each other. We need to be working with the local tier, the insurance sector, and also for other sectors as well. And I think really as we try and build that bigger risk picture, would really try and encourage that kind of collaboration. Obviously not only just between government and the insurance industry, but also are there ways that, you could learn from each other within, putting in sensible things so you can keep all the kind of commercial elements that obviously are there as well. But obviously a lot of the times when we're speaking about these things, there are really big, significant impacts to the UK and have massive impacts to people's daily lives. So if there is anything that we can do and things we can share and findings that we can share, would really encourage that. I think obviously the UK has gone through lots of kind of big crises. We had COVID, it's probably one of the biggest we'll ever face in any of our lifetimes. Huge amounts of learnings have come out of that one. But there are like so many other risks out there that we also need to try and understand as well. So I think just that collaboration, sharing data, finding those lessons when things do happen, learning from them so that the next time something happens we can be that bit more prepared is really, really important.
And we were speaking just before about this idea of sharing data, competitors sharing data effectively. And it's a slightly controversial idea within the industry, but is something that could potentially benefit the whole industry and the rest of us. Is that a fair comment, do you think, Henning?
Yeah, it is controversial in the sense that there are some insurance companies and reinsurance companies that have very sophisticated models. They've spent a lot of money on this, and they're a little bit reluctant to share it with potential competitors who might be seen as hoping to freeload on this a little bit, but it would help. I'm glad we've got a risk modeling company represented on this panel, because I come from this a little bit through a backdoor on the energy sector, and we became aware a few years ago that most energy companies, when they do their weather and climate forecasting, they base most of these models on past weather and climate events. So if you put your models on the heating degree days, for instance, for the UK or West Europe in general, and they're all starting to be a bit off because there's not that many heating days anymore. Also, it's become apparent that March has much more frequent cold spats than it did in the past. It's not fully understood. But anyway, so a lot of the energy sector had misguided data, and then we started to talk to insurance companies and ask, well, when you do your risk models on weather and climate, what sort of models do you use? And a lot of them were saying, well, so we're using past data and we're just projecting it. And I say, okay, that's a bit risky. So there's clearly a data lack here. And then the agricultural industry uses those, obviously insures itself, makes investment decisions on land use, whether they can have a profitable agricultural industry on certain lands based on these models. And if those models aren't accurate, then you have a cascading impact, and basically the reality looks a bit different to what was modeled. So I think we are in big need to improve our data in this area.
And so where do the biggest challenges for those models lie in relation to climate? Are there certain geographic areas or types of extreme climate that are harder to model?
The first thing to say is that we actually make future versions of our models. So we make versions all the way through to 2100 of all our principal climate risk models. I mean, the most difficult models to build are simply the ones which you have the least data for, the ones which are where the events are least frequent. So we know a lot about UK flood because it happens rather often. We may know much less about earthquake in Istanbul or somewhere because we haven't seen that event for a very long time. So I think we attempt to model a very wide range of climate hazards, and some are easier than others simply but through the availability of data.
And how is technology, I'm thinking particularly of AI, helping us to get a little bit better at modelling that data? I'm thinking in particular of Google's Gencast, which can now predict hurricanes a couple of weeks in advance, when previously we had sort of 2 or 3 days understanding. What are the big shifts that are happening there?
Well, you've mentioned one. I mean, this ability to instead of actually running the whole climate for the next 2 weeks in order to simulate what's going to happen, we can actually look at the past relationship between the weather today and the weather in the future, and actually use AI to estimate an alternative to a conventional weather forecast, and that has proved higher skill than a conventional weather forecasting approach. So that's just one example of the application of AI. I mean, we can assume that through loss data, claims data in insurance companies, there's going to be so much learning to be developed from the analysis of that loss data, which will be employed back in the model.
And so then what does that mean for this big question that we've touched on a number of times across the course of the day today of uninsurability? As these models get better, get more precise, and are looking forward, starts to improve in its accuracy, how much of an impact is that likely to have on those areas and properties that we've been talking about that are becoming uninsurable?
Well, I mean, we have effectively what we call Pandora's box, and we opened this box about 20 years ago for the first time. Before that, they simply flat-rated insurance. They assumed there was no better way of doing it than making everybody pay the same. Once you start modeling the risk, once you start showing that the risk can be differentiated right down to a street, right down to a house, then that's no longer the case, and you have the ability to discern the fact that the people who may be living next door to each other have very, very divergent levels of risk, one of which is insurable, the other may not. And in the UK now, this is a policy question I'm wandering into, and actually maybe I'll hand that on to talk about Flood Re, because that's an innovation of risk sharing based on the fact that we can actually quantify risk right down to an individual property level.
So I think with this one, transparency of data is really important here. And I think in terms of the government, we share lots of things that we can. There is obviously some things that we can't share, but generally the UK government, we are a transparent by default approach. So there is huge amounts of data that can be sort of looked at and can help kind of fuel all of this. I think also as well, there's something that we need to switch a bit more to, about maybe looking a bit more about sort of mitigating risks and a bit more about prevention rather than just responding. So is it, actually to use this information and try and build that into the models, build that into kind of the strategies going forward to try and actually, maybe solve some of these issues before, they're actually going to happen. And maybe back to your sort of previous question, that AI is probably there as a helpful tool and a huge potential to help maybe send like a few more kind of recommendations of things that we should be looking at, because it could obviously analyse the data and spot trends that would take sort of a human a much longer. So that might be another option as well.
I think there's a problem in the insurability and the relation to climate change here at play as well. Is like, yes, you have these problems already occurring in, let's West Australia, in California, in Spain, so in the UK, in wealthy countries. But if you look at the regions of the world, and we were talking about this the other week, that are most exposed to the most dramatic effects of climate change, they are also the regions with the biggest demographies in the world, and they're poor. And so that's basically, it's South Asia and parts of North Africa. And so first of all, in many of those areas, there is no insurance available, and there's not enough data. If there was enough data, would the insurance be so expensive that nobody wouldn't be able to insure it in those regions? And then what does the entire exercise do to you? So basically, is it insurable, yes or no, and is it affordable? And I think, unfortunately, the answer to that is quite often it is either unavailable or because the data is not there, or it's unaffordable because the economic circumstances. And a very good example is India, which over the last 3 years had in March and April more than 50% of its land had average temperatures of above 50 degrees centigrade. That totally changes their outlook for agricultural production, for health and safety. And I don't think any of that is insurable. But I also don't think we've got the adequate data to do that. And that's a bit of a headache, because we're talking about sort of people, South Asia and Africa, where probably 3 to 4 billion people are affected by this.
I mean, that is potentially quite a bleak outlook, isn't it? That we're actually saying the risk is too great, and there doesn't seem to be an immediate solution there, is slightly what I'm hearing.
Yeah, I mean, so I've heard some, but I'm no expert in this field, but I've heard some approaches that go towards trying to find sort of a global climate insurance model that's based on the vaccine policies of the last couple of decades, that you make sort of make pharmaceutical goods cheaply available for poor regions in the world. These approaches do exist, but of course in the current geopolitical environment, they look a little bit more difficult to implement. With especially in the United States, you probably need US aid for this,
Yes,
and which we don't have.
Yes. Ken, you spoke earlier about the idea of whole of society resilience around the idea of mitigation. So how do we bring business, government and communities together, and what's the role of insurance in that to help build that whole of society resilience?
So first of all, what a question that is. I think, so I've said this already, but I think it's really just about, like, collaboration is the heart of it. I think for the insurance industry, I would really say, come and approach government if you've got different ideas on what you don't know. We are there, we don't know what we need to help and what we need to do with, so think about how you can approach us in different ways. Sometimes if it's climate focused, the Met Office can be quite helpful as well, and we're actually doing a project with them at the moment to try and look at how we're going to sort of run a sort of insurance stress test for flooding that we've actually given some specific data for. So I think that's something that we wouldn't have done if that request hadn't come in. So I think really as well, just trying to be part of the whole process. So don't necessarily wait to be asked or wait to be consulted. If you have met someone, try and get in that way and share your ideas. Whole of society resilience is also more than just like the risk. We also need to look at what the capabilities are that we need to be able to respond to risk. And that's something that we're, like, personally in my team at the moment, we're looking a lot into. So it's actually really working out, okay, this is going to happen, but actually, how are we going to respond to it? Do we actually have the resource to do that? So that would be something that I would really look at as well within that wider piece. I think, the insurance industry has a massive, massive role to play in whole society resilience. So yeah, very happy to work with you, and please let us know what we can do better.
We've spoken a little bit about technology and the impact that technology can have on our modelling. We have a tiny bit of technology here today, which I think is about to flash up, which is the chance to ask your questions via something called Mentimeter. So if you can see the QR code there, and if you had a question to ask and wanted to scan it, you can pop that down and send those in to us there so that we can stack those up. It's also on the screens on the side, which might be a little bit easier to point to than the one that's behind us. I want to come back to this question that we had around government and the industry sharing information. The flip side is that the industry has lots of information, and these models can better help businesses and policymakers to make better informed decisions. But policymakers don't always necessarily listen to them. So I'm thinking about land use, for example. We've made reference to house building in the UK. We know that there is a housing shortage. We know that there's pressure on politicians to build more homes, but we also know that there were more than 100,000 new homes built on high-risk flood zones planned for the next 5 years. So what can be done to improve that conversation so that policymakers and our elected officials pay a bit more attention to those risk models, do you think?
Well, the first thing to say is that floodplains have a very bad rap. It seems to me at this meeting they have a bad rap. You can build on floodplains fine as long as you recognize that the plain is going to be flooded from time to time and you build up. All you have to do is go along the Thames and you can look out of the train window going into Paddington and you'll see houses which are raised off the ground because they've got the amenity value of the river right next to them, and they've chosen to live there, and I imagine they're buying insurance, but they're 1 or 2 meters off the ground level. You can do that in many floodplains, and then you don't need to talk about the fact that you're building in floodplains as being a bad thing. It could be an informed thing. The problem is building without proper information about what is the probability and the height of flooding. I mean, I think that's an example where you're quite right. There needs to be a better sharing of data to make sure if you're taking decisions about risk, about adaptation against risk, against accumulating climate risk, that you're taking it in a really informed way, and therefore the industry, insurers, risk modelers are all potentially able to offer you information which is important to make sure you're making a society which has significantly reduced its risk.
So when we spoke previously, you also talked about what we could do if we come back to that question of the risk impacts in the global south and some of the poorest countries having some of the worst effects of climate change. We talked a little bit about that on our previous call, Robert, and your solution there was much more around the regulation of how people rebuild to minimise that risk. This is an extension of that point I think you were just making.
Sure. No. I mean, once you start getting into the developing countries, into poorer countries, and the challenges that people may well be living in places which are very, very risky, and where you need to help people. They may not realise they are living at such risk. I mean, and there are many things which we can do. And the most important is to try and enforce building codes, in particular building codes against wind, against flood, against earthquake. And if you can achieve that, you'll bring the level of risk down to a point where insurance is much more viable option. So the starting point, I mean, we live in a sophisticated society which has lived with flood risk for hundreds of years. So a lot of decisions have been taken effectively not to live in certain places, not to build very low-lying properties. You may go to a country in the Caribbean and they haven't absorbed that information in quite the same way, and they need help in actually creating a building stock which is low risk and therefore insurable.
So we are about 5 minutes from the end. We have 4 questions that have come in. So we'll have a quick look at those. Before we move to those, I wonder if each of you could give me a quick take on what you think the future of climate-related risk management looks like.
So, when before I sounded a little bit like a doom monger because I'm a political risk analyst, there's opportunity and solutions already. So, yes, the past data might not be ideally suited to project or forecast the future, but the data is getting better all the time. I mentioned the risks around India, but India is a data superpower in the making. There are a lot of fintech solutions and data solutions that, from the private sector that can be where you can approach governments. There's also at the United Nations level the loss and damage fund. Part of that could be used to help in the insurability of land in emerging markets. I mean, Indonesia is a very good example. I used to monitor Jakarta quite closely. In Jakarta, there's like 1 street per year basically gets swallowed by the ocean. And to the point of should you be building there is one question. And if you can just find areas of Jakarta where you can actually build more safely and then provide some form of basic insurance and provide data, I think would be well advanced. And I think we're going to get there. So I'm cautiously optimistic.
So mine would be not assessing risks in silos, really looking about the interdependencies between risks and really trying to take that sort of big whole picture point of view. So obviously there are different types of climate risks, but there's also climate risks sort of as an overall thing. And I think really just understanding how different risks interact, and then also data collaboration and really focusing on that capability building as well.
Yes, I mean, I've said at a meeting here before, I mean, my number one priority would be to educate people about risk, to start teaching risk to 6-year-olds through playing snakes and ladders, whatever it takes. But getting people to comprehend risk then is the start of a conversation you can have about identifying what risks they currently face, which in developing countries, a lot of people who are marginalized end up in high-risk locations, living on the beach, living in flood zones, and so on. But actually taking action, informing people, taking action to understand their level of risk, and then you can start reducing it. You can't start reducing it until you understand actually what it is.
We've had a number of questions come in. We are running quite tight on time, but I just want to see if we can squeeze a couple of those in. There was one that just came up on the emerging secondary risk of freezing and subsidence in the UK, and whether that's being built into risk models. Would any of you have an input on that?
Well, the answer is yes.
Great. So yes, it is. And whether what else have we got coming up here? Maybe we can squeeze one more. How are tipping point data sets being incorporated into risk models?
Well, I mean, with a sort of a watchful interest, because a lot of tipping points are there. I mean, there's obviously a question about when they're going to occur, and there's a lot of uncertainty around that. And we're looking out into the future. I mean, we see tipping points as being very significant over a sort of 30 to 50 year time frame, probably less significant over a 10 to 20 year time frame.
There are lots more questions coming in. There's lots more that we could discuss about this, but unfortunately we've run up against the clock. Before I introduce my next session, it would be great if you could say a wonderful thank you to our panel on risk management.